All right, what's up, y'all? It's your boy Tibby back with another one. Thank you for checking out the Day Trading Bootcamp. We're on episode 7 right now. I think we're going over entry models and trade management. So far, we've covered liquidity, structure, fair value gaps, and precise entries. Now it's time for us to put everything together and create our own entry model that you can use on a daily basis, and also the mindset that you need to stay profitable and not blow your accounts. All right, so let's just go straight into it. So why do you need an entry model? A lot of times when you get into trading, you're going to find yourself hesitating a lot before you get into a trade. That's because you don't have a clear model, right? Great traders don't guess. They follow a process that you can see at the last line there. Is great traders don't guess. They follow a process. So what a model is going to be your checklist for your entry. So it's going to tell you when to enter your trade, when to exit the trade, and when to walk away from the computer, right? Because you can blow your account in a day. You can lose everything that you've made over the last however much time in a single day if you don't know when to walk away. And you need to know when to enter so you're not missing your trades, where to exit so you're not losing too much, and again when to walk away again so you're not losing too much. All right. So this is my A+ setup checklist that I look for every single day. So I'm gonna give it to you guys so you guys understand what I'm looking for when I get into these charts. The first thing that I'm looking for is a bias for market structure, higher highs, higher lows, or lower highs and lower lows. The next thing I'm gonna look for is gonna be liquidity sweeps on the weak side. The third thing is going to be a change of character. And then with that change of character, I want to see a fair value gap formed. Then I want to see price return to that fair value gap. That's when I'm going to take my entry. I'm going to place my stop above or below the swing high or swing low, like I showed you guys in the previous video. And then we're targeting the next pool of liquidity or the imbalance if we're reaching for internal range liquidity instead of external range. So this model is what I trade every day. It gives me my precise entries and keeps me emotionally, in check. So I'm not going back and forth with, oh, I should jump in now or whatever it is, right? So next we want to talk about is trade management, right? So getting into the trade is really easy. It's just pressing a button, but managing the trade, that's what kind of separates, pros from the amateurs. So here's how I like to manage trades. This is just a basic trade management kind of layout. Once you get a little bit more advanced, you'll be able to tweak things and do things how you want to. But if you're just starting out, a beginner, these are good rules to have. So your break even rule. So when price hits 1R, you go break even. So what 1R is, one reward or one risk to reward. So if you were risking $500 on this trade, once it gets to $500, you will move your stop loss to break even to where you won't lose any money if price comes all the way back down. All right. The next one is going to be partials, taking partials at 2R. So once you get past the 1R and 2R, so if you're risking 500 and you're at 1,000, you will want to take maybe half or, whatever percentage you're cool with. You want to take that off the table and kind of lock those profits in. And then the third thing is you're going to let the rest run to the next major liquidity area where your full TP is set at. Now, your max risk per trade, especially since you're beginning, is going to be 0.5 to 1%, especially on funded accounts. But whatever your balance is, figure out what 0.5 or to 1% is of that balance, and that's how much you want to risk per trade. You can also set a daily limit to where if you're going to place multiple trades in a day, you're like, okay, I'm not going to lose more than $500 today. And then you could base your risk management based off that as well. All right, so here's the mindset of a profitable trader. First things first, like being a good trader isn't about catching big wins. It's about not blowing your account when you're wrong. And how do you do that? First, always keep in mind that you're trying to protect your capital. That's your main priority, is protect whatever money that you have. The second thing, you want to follow a trader model, what we went over, that A+ checklist. So if all those boxes are checked off, that's when you're getting in your trade. So you're putting yourself in a higher probability of your trade winning because you're following a model and not just guessing. And one thing you don't want to do is no FOMO. So the fear of missing out. So you'll see like big moves in the market and you're like, damn, I need to just get in. So you just start buying and getting in because you feel like you're going to miss out on a move. And a lot of times that just ends with you getting chopped up and blowing an account or just losing more than you really needed to lose that day. And also no revenge trading. So revenge trading, this is one thing that I deal with. I don't deal with FOMO, but revenge trading, bro. Like, I feel like it's personal sometimes with me in the market. So it's like I lose 1,000. I'm like, yo, I'm about to get my rack back. I'm getting it back right now. and then you just keep going in, and then you just end up in a worse position, or you still end up in the same position. There's a few times where I've done that and it's worked out in my favor, but when I tell you that's not what you want to do, it's not the move at all. Like it's just not worth it. It's not worth the headache, the stress that you're gonna go through when you're really dealing. I mean, when you're dealing with like money, like real money. Like I'm not talking about a couple hundred, like thousands. You get what I'm saying? Like you definitely need to step away and just like, you know, go for a walk or reevaluate, turn the computer off, and just kind of sit back and, you know, reevaluate the situation and come back with a level head. So that's one reason why, like I stop trading at like 11:30, and I'll come back to do the afternoon trades if I'm not seeing my setup in the mornings, or if I'm just losing too much, I'll come back maybe for one last trade for the afternoon PM session. But that's why I just like to separate my sessions, so that little 1 hour, hour and a half gap in between, I can kind of get away from the computer and, like, you know, de-stress and get my mind off everything and come back with a clear head. But if you want to be profitable, these are the rules you want to follow. You know, this is a business. This is your business. You're making money, so it's a business. This isn't gambling. This is what separates it from gambling, is that you're actually putting yourself in a chance of higher success because you're following a model. You know, you're protecting your capital, and you're not just guessing. You're not leaving it up to 50-50. Like, you're giving yourself a little edge. Maybe it's 55%, it's 55-45, but whatever it is, you want to make sure you have that edge to what tipped in your favor. All right. So every day, like I said, every day I run this model in my live room, and over time the edge compounds. It's boring, it's repetitive, but it works. Like, I've showed you guys the profits before. Like, it works just by following this simple model. A lot of y'all are new to day trading, so I know you guys are probably watching a bunch of videos. And one thing I can really tell you guys is that, you know, a lot of strategies work, but you have to stop bouncing around from strategy to strategy. Like, even if you don't rock with this strategy right here, if you find something that works for you, stick to that, like, and just dive in and understand that strategy and kind of tweak it and make it better over time. And that's what's really going to progress you in this market, in this game, period, right? So if you stick to one model, master trade management, and stay disciplined, you've already ahead of 90% of traders out there, because a lot of traders out here just, and it's social media, bro. Like, you go on social media and you see all these cars, you see dudes with the watches, the bust downs, and, you know, the Rolls, Ferraris, Lambos, all of that. And you're like, damn, it's possible. Like, you know what I'm saying? There's people who make this money from trading, right? But you have to be disciplined enough to understand that that's just not going to happen tomorrow. You know what I mean? It may never happen for you, but if you can kind of humble your ideas to where you're taking smaller wins when you can, and just understanding that you're building it up, and then as you build your account balance, you could take bigger wins and bigger trades. That's when you'll really start seeing the difference. But right now, you need, as a beginner, you need to be really strict with your rules and find the discipline and have a daily goal set, something that's realistic, you know, 500, 1,000, even if it's just $100 a day, whatever it is. And then you also need to have that also on the, you know, on your bad days. How much are you willing to lose? Is it going to be $500? Is it going to be 1,000, 100, whatever that is? You need to figure that out. And that's what's going to set you ahead of everyone else. Okay. So yeah, hey man, if y'all like this video, just go ahead and drop a comment and drop a fire emoji down in the comments if this helped clarify your approach. If you got any other questions or what you would want me to talk about next, go ahead and drop that in the comments also. In the next episode, we're going to be going over top-down analysis. I'll be doing that later today when the Asian market opens up and we get a couple of candles printed out. So the top-down analysis is just pretty much going to be from the higher time frame bias down to lower time frame entries. I pretty much just mark out my charts and show you guys what I'm going to be looking for to get the day started tomorrow. All right. So plan those trades, execute that model, and you manage that discipline. That's how you're going to set up to win, and you're going to have the big wins. All right. All right, y'all. Y'all have a good one. I'll catch y'all in the next video.